What are you doing? Andrew Keene in the house. If you guys have any questions at all, please feel free to share that in the chat box. I'll be going for about an hour today. I'm supposed to start at 7, but I can start a little bit early, no worries. I'm going to teach you hidden market reveals, confessions of a floor trader. I was a market maker at the floor of the Chicago Board Options Exchange for about a decade. I'm a real money trader. I trade, what I think is relatively not that much money. I made money today. So I have about $70,000 in my trading account. And every single day, I'd say an average P&L is about $200 to $1,200. Some days I'll have a little bit more. So maybe like today I made like $3,000. Today was a good day. But I am a real money trader. And I'll be talking to you for the next 45 minutes of my favorite strategy, which is following order flow in the option market. Little risk disclaimer, I have to put this in every single webinar. Day trading, short-term trading, options trading is extremely risky undertaking. Is generally not appropriate for anybody with little to no capital or low tolerance to risk. You can lose all your money when you trade. We used to have a joke in the office that said, you want to learn how to trade? Light $100,000 on fire. And what that meant is trading is hard. It's challenging. It's not one of those things that is like, oh, I just do this and I make money. Okay. I've actually now dove in to the world of sports betting is very similar. My first sessions sports trading was bad. And I'm not a registered investment advisor. I cannot give recommendations or advice. What I can do is offer my opinion. We run 8 portfolios here at Alpha Shark. I'm very proud to say every single portfolio is up year to date. And I'm going to teach you guys the way that I trade, which is pretty simple, pretty straightforward. Basically, we just buy call options for the most part. And I'll teach you guys my methodology of why I do that, and we'll talk about how the market trades. Today will be a little bit more educational, and then towards the end, we will, throw in some examples for you. So today's schedule, number one, we're going to teach you long and short. You can buy calls, you can sell calls, you can buy puts, you can sell puts. That's everything you can do. Number two, deuce, reading order flow. And number 3, we're going to teach you guys the best way to trade. So I'm going to demystify trading options in a very easy, concrete way. And then what we'll do is we'll teach you guys what the best strategy for trading options. I want you to test it on $16. Here's a picture of me on the trading floor. This is my backer. His name is Craig Luce. His acronym was LSE. I was known on the trading floor as AXK. So sometimes my friends still call me AXK or AK, Andrew Keene. I couldn't get ARK. I couldn't get ARC, DRW. I tried everything possible and I could not get anything. So I ended up with AXK. And that's fine. Let me get rid of that graphic. I used to be on TV a lot. I used to do a lot of webinars, to be honest. I've known David for probably close to 15 years. I don't really do webinars anymore. It's not really my jam. As much as I like to teach and educate, I value other things in my life a little bit more. So I'm not really on the webinar circuit. Some of these people will do a couple webinars a week. I would say I probably do about maybe 6 webinars a year. I just really don't do webinars anymore. And that's just the way it is. So be fortunate and grateful that you get AK for a webinar. Hear me out. Here is on CBO TV. In the middle on the top was co-hosting the show on Bloomberg. Then we have, this was CNBC on San Diego. This was CNBC. This is CNBC, and this is CNBC. So I used to be on TV a lot. Like I said, I'm not on TV as much anymore. I used to float my ego. I used to love it, but for me nowadays, it really doesn't do anything for me. So what is an option? An option is a contract that gives the owner the right, but not obligation, to buy or sell a specific number of shares of a particular stock at a fixed strike price by a specific date. There are only 2 kinds of options. There are 27 different option strategies, but there's only 2 kinds of options. There are call options and there are put options. A call option is a contract that gives the buyer of the option the right, but not obligation, to purchase a fixed number of shares, which is usually one option is 100 shares, by a fixed price known as expiration at a fixed price is a strike by a fixed expiration known as your expiration date. Nowadays, there's expirations if you trade in SPX every single day. The buyer pays the premium to the seller. Simple and easy. A put option is a contract that gives the buyer of the option the right but not obligation to sell a fixed number of shares of an underlying security at a fixed price on or before a set expiration price. The buyer pays premium to the seller for that right. So that's it, guys. Calls and puts. You can buy a call, you can sell a call, you can buy a put, and you can sell a put. And that is the whole kit and caboodle of trading. You can combine those strategies if you want to have a lot more strategies. But that is it. Let's talk about calls. You can buy a call. If you buy a call, your risk is very, very little. The most you can ever lose when you buy a call is what you pay for the call option. Your reward is unlimited. In theory, the stock can go to infinity, so you can make as much as you want. It's happened in the GameStop. You can sell a call. If you sell a call, your risk is unlimited. Your reward is what you sell the call for. You sell a put. Most you can ever make is what you sell the put for. The most you can ever lose is the strike price minus what you sell the put for. If you buy a put, most you can ever lose is what you pay for the option, and what you can make is your strike minus what you pay for the option. If we had to break this down, we want the lowest amount of risk for the most amount of reward. So if we looked at it here, we want the lowest amount of risk, and the lowest amount of risk comes in two forms: buying a put and buying a call. Combine that with we want the most amount of reward. Unlimited. This is limited. So if we had to look at this whole grand scheme of things, and we look at everything as a reward to risk basis, the best thing we could possibly do is buy a call. Our risk is limited. Our reward is unlimited. Hands down, bar none. We're going to combine that with the way the market moves, and we'll look at that in here in a second. So reward to risk basis. The best thing we could possibly do is buy a call. That's because our risk is limited and our reward is unlimited. The second best thing we can do is buy a put. Our risk is limited. Our reward is the strike minus what we pay for the put. Our third is to sell a put. If we sell a put, the most we can ever make is what we sell that option for. The most we can lose is the strike minus what we sell the put for. This is the whole, and then sell calls. Sell calls, the most you can lose is unlimited. This is what happened in the GameStop fiasco, is that they were short stock outright. Same thing as being short calls outright. You can lose infinity, and that's not our goal. Our goal is never blow out a trading account. I've blown out a trading account before. It is not a fun feeling. I never want to blow out a trading account ever again. So combine this with the fact that the market goes up 85% of the time. Do I need to repeat that? The market goes up 85% of the time. So you say to yourself, wow, this is great. I can buy a call. My risk is limited. My reward is unlimited, and probability and math is in my favor because the market goes up 85% of the time. If we sell, and that's a bull strategy. If we sell calls, our risk is unlimited. Our reward is limited. And it's a bearish strategy. The market goes up 85% of the time. We want to do strategies that are positive, bullish. Okay. Third strategy, we can buy puts. If we buy puts, then our reward is our risk is limited. Our reward is strike minus the price we pay for the put. And that's a bullish strategy. So in the last slide we talked about, and this is what I'm here to do, is to teach you risk versus reward is this order. Buy calls, buy puts, and sell calls. That's just a mathematical equation. That is a fact. That is your order on reward to risk basis. Then combine this with the fact we want to be bullish. Sometimes it doesn't make sense that the market always goes up, okay? But it seems like it does. S&P was up 50 points again today. It is unbelievable. Is it unbelievable or is it actually believable? I think the S&P is going to 7,000. Why wouldn't it go up another 10%? Yeah, the VIX at 15 right now. It's gnarly. It's wild. So we combine these together, and then we say our best setup, hands down, is buying a call. Simple and easy. Here is the profile of a long call. And if we actually want to extend this out here, this would go to infinity. And like I said, if you guys have any questions throughout the presentations, I'm here to answer questions. I am an educator. You know, at first, I'm a trader. I will always be a trader. It's like my bread and butter. I love it. I will bet on anything in life as long as I think there's probability in math. I don't bet on things where there's no probability in math. For example, I don't play blackjack. I don't play roulette. I don't play craps. Because in the long run, I'm always going to lose money. Poker, I will play because I think there's a theoretical edge. I will trade options. Teaching the strategy I'm going to teach you guys today. I will not day trade stock because I think the hedge funds are smarter than me. So this is a long call strategy. And what this is buying the 20 call for about $6. On the strategy, you'd be risking $6 to potentially make unlimited. Sounds like a good reward or a setup. I concur with that statement. That is a good reward setup. AK, let's take that trade. Here are the Greeks of a long option. And you don't have to worry about the Greeks. If you don't want to know about the Greeks, it doesn't really matter. Don't be like one of those people that's like, I need to learn the Greeks. What's my delta, gamma, theta, vega, rho? You don't really need to know that, okay? Look at the Greeks, but it's not one of those things that I really look at here. So long call. Then we have a Greeks is positive, gamma's positive, vega's positive, theta is negative. And then we have a positive delta between 0 and 100. Two definitions of what a long delta is. A delta is between 1 and 100. Number one, it is how much it will end up on expiration. So a 30 delta is a 30% chance going up on expiration. 50 delta is a 50% chance going up on expiration. Numero dos, or numero two, it tells you how much that option will move with $1 stock move. 30 delta, stocks goes up $1, it should go up 30 cents. Goes down $1, same thing. Simple, it's easy, it's concrete. There's nothing really about it. Short calls. Short calls on a reward to risk basis and combining the market always goes up is the worst strategy you could possibly do. Why is that? Simple and easy. Because we see here a long call is, this is blowout risk. If you sell a call option, it can go to infinity. Okay. This could keep going and going and going. You could sell a 10-cent call that goes to $1,000 in theory. That is not the setup we want. And it's also a bear strategy. The only time I would ever tell you to sell a call option would be if you had long stock against your call option. That is the only time I would say sell a call option. Simple and period. Put options. Put options are bearish. They can be bullish as well. A put option is a contract that gives the buyer of the option the right, but not obligation, to sell a fixed number of contracts our shares at an underlying asset at a fixed price on or before the expiration date. The buyer pays money to the seller for this. This is a bearish strategy if you buy puts. We only want bullish strategies. Why do we only want bullish strategies? Because the market, in theory, always goes up. But you can see here, this is buying a put option. So this is buying the 20 put for the 15 put for $5. You can make 15 minus 5, which is 10. And the most you can lose on this is $5. Simple. It's easy. It's concrete. When you start combining option strategies, which I don't do much here, then that is when you can get in a lot different things, such as put spreads, calendar spreads, jelly rolls, Christmas trees, and stuff like that. 1x2s, 2x4s, whatever it is. This is the chart of a long put. A long put, you buy a put. If the stock goes infinity, most you can ever lose is what you pay for that put. And a lot of hedge funds are moving to long put strategies due to the fact that they don't want to blow out. If you short a stock, you can blow out, but here you cannot blow out. So just kind of keep that in mind here. A lot of hedge funds are moving towards this strategy. Here is selling a put. Selling a puts, you make a little bit and you risk a lot. Good strategy? I mean, it all depends, right? Some people think this is a good strategy. It is okay if you want to get stock at a lower price point. I'm not a fan of selling puts because I can make more money if I buy a call and the stock goes up. But if you wanted to do this, you could do this. Okay. So this is selling puts. This is selling the 20 strike put for $5. The most you can ever make is $5. The most you can ever lose is the strike minus the put, which is 20 minus 5. So it is a bullish strategy, but I think there's better setups so you can make more money if stock is flat, higher, or lower. Delta. If you want to know what delta is, we will tell you what delta is. If you don't care what delta is, you don't have to know what delta is. Delta really isn't that important. Delta is a measurement of the speed of the option. We talked about it earlier. There are two things. Number one, it is how much a stock will move with $1 price move. So if an option has a 30 delta, if it goes up $1, it will go up 30 cents. Number two, the percentage chance it ends up in the money. Okay. Percentage chance it does in the money. So a 25 delta has a 25% chance of being in the money at expiration. A 50 delta has a 50% chance of being in the money at expiration. Simple and easy. We combine these strategies and we want a bullish strategy and we want the best reward to risk setup. Okay. What is it? Okay. We had two bullish strategies. We had a long call and a short put. We had two bearish strategies. We had a short call and a long put. We want a bullish strategy and we want the best reward to risk setup. So all we have to do is buy call options. Is it really that easy, AK? I mean, these are our portfolios here today. And they're all basically like long calls, which is actually like kind of sad to say. But let me show you our portfolios. So here is personal portfolio up 389%. These are all long calls. X portfolio, Alpha Shark up 257%. Let me make sure that is accurate. That is accurate. Alpha Shark Plus up 619%. Superior Options up 721%. This is sold. Superior Option Plus up 402%. 10 out of 10 up 1,423%. That's our best one. And then ATM is put spreads. So this is not long calls. We run 8 portfolios. 6 of them are long calls. Okay. 6 of them are long calls. One is a put spread and then one is stock. So that's it, guys. I just buy calls. I had a call with Trader, the brokerage company, and they're like, "What's your trading strategy?" I go, "I watch order flow and I buy calls." They're like, "I know, but what else do you do? Do you sell calls against it?" I go, "Nope." They're like, all you do is buy call options?" I go, "Yep." Like, wow, that's pretty crazy. I'm like, "Nope, it's not crazy." That we're in a market where the market goes higher. Volatility is so cheap. Oh my God, it's so cheap. The VIX is 15. So we want to buy call options. That's simple and that's easy. I've taught you your education for the day, calls and puts, and you want to buy calls. So you say to yourself, AK, this makes sense. Thank you for teaching me what long call, short call, long put, short put is. How do I begin trading with the pros? Ask yourself, and I know my answer of it, but I will ask you your answer of it. Do you think people are trading on insider information? I will say that again. Do you think people are trading on insider information? I know my answer. I'll let you come up with what you think your answer is, but I know my answer. There's been cases, Martha Stewart, Leon Cooperman, Mark Cuban. Mark Cuban, Leon Cooperman were all found innocent. Phil Mickelson, guilty. Who's the big sports guy? Billy Walter, guilty. Okay. People are trading on insider information. I know my answer. I will let you answer that, but my answer is yes. So currently, I've spent close to $1 million to bring these trades to retail traders. I run about 25 proprietary based scanners in the derivative space. If you wanted to buy every scanner, it's going to cost you about $300 a month times 25 scanners, about $7,500 a month times 12. It's about 100 grand. I've been running my services for 15 years. That cost you $1.5 million if you wanted to buy all the scanners. Or what you could do is let me do all the legwork and just kind of spoon feed you the trades. Spoon feed. I haven't even drank yet today. Spoon feed you the trades. Okay. And that's what I want to do today. I've taught you the system. Now let me spoon feed you the trades. Most traders are trading against smart traders. Okay. You guys are here for two reasons. Number one, you're here to learn something new. Cool. I appreciate that. Thanks. Number two, you're here because you want to make money. If you didn't want to make money, you wouldn't be here. Okay. I have 8 portfolios. 6 of them are up year to date. Last year we had 8 portfolios. 8 of them are up year to date. Okay. And all I do is I don't trade against the smart traders. This is big institutional orders. This is the biggest and best trader in the world. This is you right here. You're trading against the smart traders. The market goes up, you want to get short. Market goes down, you want to get long. No, 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 no. We want to be swimming with the smartest traders in the world. I compare this one of two ways. Carl Icahn, one of the best hedge fund managers in the world. Believe it or not, he does not know who Andrew Keene is. I know it's crazy to think he doesn't know who Andrew Keene is. But if he was to text me and say, hey, I'm going to put a $1 million position on in Cheniere Energy. Do you want a piece of the action, AK? I'm like, yes, you're Carl Icahn. I want a piece of the action. Or if you go to the poker table and you go to the back room, you say, who is the best poker player here? That's Phil Ivey. Phil Ivey, I'm Andrew Keene. I don't want a lot of your money, but I could get a percentage of all your stuff. If he said yes, bam, I'd be in business. Simple, easy, guys. All we do, this is literally the easiest. I call it the KISS system, keep it simple, stupid. All I do is I find a trade. I'll show you one example today. This is a trade that we sent out today. Okay. So let me get rid of this. So this is one of my scanners. Here's ASPN. Where's ASPN? Not ESPN, here. So some trader somewhere in the world, you never know their stock or option position, bought 1,262 ASPN 919 2025, 10 calls. Okay, $75,000 bet, not the big of a bet. Okay, this is just one of my scanners. They bought $70,000 of calls. I said to myself, oh, I like the signal. I'm going to call this signal out as a signal to our subscribers. As you can see here, I came in, I bought them at 55 cents, and then I bought them at 60 cents. So I'm in at like 57 cents, 16 contracts. I sold them 23 cents, 23-cent profit, and I have no position on, and I made $350 on 16 contracts. Is that hard? This is the only trade I did in this account. I saw the signal on the scanner. I bought the same calls that trader bought. Simple and easy. I don't know who the trader is. Less than 30 minutes later, I made $350. Am I going to make money every single day? Absolutely not. It is possible that I actually lose money on some days. I know that's crazy to think. But this one trade today, guys, this is a signal we sent to our subscribers, made $350 here in less than 30 minutes on 16 contracts. I only had, in theory, $1,000 risk. So I made 35% profit in just 35% profit in just 30 minutes. Simple, easy, and clean. Okay. Where's the next slide? It's not going to my next slide. There we go. Ooh. Sorry about that. Let me go back. Okay. So here's the next side. This is an Alpha Shark signal. This is option volume. Okay, average volume, 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 average volume. We look for an option volume spike. Okay, look what happens to stock after the volume spike. Stock went up. Okay, it's not a hard concept, guys. This happened in ASPN today. Happens all the time. It happened to Cake overnight, EH overnight. We see the spike here. So we see a option volume spike. Option volume spike, and then we see the stock going up in value, and it happens all the time. Okay, what happened to KSS? So when I graduated college 24 years ago in 2001, I got a job offer to be an investment banker, and my mom said, AK, that's a lot of money. She didn't call me AK. She goes, Andrew, honey. That's what she actually probably said. I call my mom like every other day. Hi, honey. How are you? My mom called me. She's a nice Jewish woman. She calls me and she's like, an investment banker? They make a lot of money. What do you want? What do you think? And I'm like, nah, I think I want to be a trader, Mom. And my dad was the one that told me to be a trader. And I thought about it. You know, growing up, I grew up in the suburbs of Chicago. I used to see those guys with yellow jackets yelling and screaming on the top of their lungs, always drunk, on drugs. Yeah, it's a great career path for me, Mom. I'm going to be a trader. If I wanted to be an investment banker, I think they were offering me like 80 grand. But you know what I said? Hey, I'll take 2 grand a month. Sounds great. Let's make 2 grand a month. So I took $2,000 a month to become a clerk in a clerk to trade program. Then I learned everything possible of options. Backwards, forward, left, and right. I know everything about options. If they cut their dividend, what does the price of the option do? Interest rates. So I took a job to trade. 9 months later, I had the option and ability to trade. Made more money every single year than the year before. And then I had the AMAG debacle in 2007, I want to say. We'll go to the next slide and we'll look. I lost $500,000 in one stock. This is not a made-up thing. This is a real thing. And I lost $500,000. And then what happens? I'm like, you know those commercials that says like want to get away? I was like, yeah, I do want to get away. I need to get away. So what did I do? I did a smart thing. Actually, probably one of the dumbest things ever. I went to Thailand. So the AMAG thing happened in 2006/2007. My backer said to me, you know what? You fucked up. And excuse my language, but sometimes when you swear very rarely, it makes more potent. I did. I made a mistake, and I have to learn from my mistake. I had $100,000 to my name. $100,000. It's not a lot of money. It's a decent amount, And I said, you know what? I'm a really good trader. I'm like, I wouldn't say Michael Jordan of trading, but maybe I'm like D Wade of trading. I'm legit. I'm good. But I messed up. So I went to Thailand and I taught English at a Buddhist monastery. That makes any sense. Let's go teach English at a Buddhist monastery. But I was happy. You can see the date of this. This was 18 years ago. I was really happy. I enjoyed it. Okay. So I enjoyed it. And then what happened? I came back and turned that money into $5 million trading in 2 years. Okay. And even to this day, we have 8 portfolios. 8 of them are up here today. So I'm very proud of my career path. So when you think about how many options trade, I am a small trader. I'm a very small trader. I take 5 contracts, 10 contracts, maybe 20 contracts. Okay. If someone's taking 5,000 contracts, they're probably a really, really big trader. They're smart. They have access to information and technology that we do not have. So they are a very good trader. They are an institutional trader. They're usually employed by a Wall Street bank. They're trading with firm capital. They have a long, profitable track record. They have access to inside information, buyout rumors, earnings leaks, large hedge fund trades, and non-public economic reports. Simple and easy is they're trading on information we do not have. So why wouldn't we just take the same trade as them? Ooh, that's a good idea. So we can found a way where we can take the same trade as them. Information is published on Zacks, Wall Street Journal, Market Watch, TheStreet.com, and Fidelity. This is Wall Street's trick of the trades. Brokers, after they buy the call option, brokers will push the stock to clients. Multiple hedge funds take positions. Market makers bid up shares of the price. Analysts issue upgrades. Positive stories are released to financial media. Goldman Sachs had an article, was an old article about Goldman Sachs, that Goldman Sachs was profitable 236 of 252 trading days. Should I repeat that? Goldman Sachs was profitable 236 of 252 trading days. That is insane. Why? Because they have access to information that we do not have as a retail trader. So what do you just want to be on Goldman Sachs' side every single time? Sounds pretty smart to me. Unusual option activity has profound impact on stock prices. Buying can send the stock price up. Selling can send the stock price down. NASDAQ.com said very few things can move a stock more than unusual option activity can. Investor Business Daily says this is what reveals what hedge fund managers and other large investors are doing at critical moments. Let's talk about options, because that's what we're here for. If an option has a price change that is big, high deltas has a price change that's big, the percentage is really small. For you to buy a $10 option, for that to double in value is really, really hard. I showed you an example of a trade. I got into 55 out of 80. 25 into 55 is about, 40%? More than 40, 42%. Low deltas, price change is small. Your percentage gain is big. I have a sweet spot for the price of the option I like to trade. I like to trade options that are 30 to 70 cents. We showed you an example, 42% in 30 minutes. That's great. I'll do that every day, all day, right? Because those cheap options can move very, very fast. Very, very fast. So for trades for Alpha Shark, we gear 30 to 70 cents with a delta between 15 and 45. I like out of the money options. When they're out of the money, if you get an FAR, fast, aggressive move in the right direction, we can get that huge, huge move to the upside. And that's what I like. FAR, fast, aggressive move the right direction. For the first time in history, every single trade that we take, we have historical data on. It's taken me 14 years in my trading career to get to this path. So we have a back tester or historical data thing that shows me every single option on every single scanner, how it has performed in the past. So back testing. Intel was a 10 out of 10. That would be an official signal for our service. NEE was an 8 out of 10. We made money in NEE. That earnings, the stock went down. We were already out of the trade. Let me see those. Ooh, NEE, whack. Hot 80s are a buck right now. Ugh, that's ugly. That's move $2 a day. So that's interesting. A buck, I don't hate it. ROIV is a 6 out of 10. So when I'm watching the scanners, and I have 25 scanners, and when I'm watching this shows me a proprietary base ranking. This is our 10 out of 10 system. How many times? Okay, so let's look at this. This is a perfect example. Here is CAR. Somebody bought 2,535 CAR 8/15/2025, 250 calls for $2.50. This symbol has hit this scanner once in the last 2 years. The one time it hit, it made money. That's a small sample size, but it's made money on every matrix. So maybe you want to take this trade. This is Ava's budget. This could be a possible one of those short squeezes. And that's a trade example. Okay, you can get in that trade for $2.50. Remember, my sweet spot is around that 30 to 70 cents. So I didn't take this trade. 10 out of 10 is the best we can get. 7 out of 10, Crocs. I'll be looking at these tomorrow. SEP 140s and Crocs. Okay. They hit at $1. I like this trade. I'll be looking to buy these tomorrow. Crocs SEP 140s. It was $3.50 a day. Kind of in the dumpster here. Someone thinks the stock's going to go higher. This will be my main option I'll be looking at tomorrow. These went up. See, this is why my sweet spot's so low. That option went from 25 to 60 cents today. SNBR. That's what happened to those iRobot calls, the 5.5s. They're 30.45. They hit a 30. So I think they traded. They made 50% profit. So Crocs is one I'll keep an eye on tomorrow, guys. Crocs is one I'll keep an eye on tomorrow. That will probably be a signal for one of my services. This is a Crocs. Crocs SEP 40s. Let's see if there's anything else I like here. Crocs SEP 40s. I like it. I like it like that. Okay. Moving on. Win was a 0 out of 10. So we wouldn't take that trade. So I call this, and we got about 10 to 15 minutes left together. We call this the KISS system. It stands for Keep It Simple. We keep all of our trading very, very simple. Like I said, if you wanted to purchase all the scanners, all you'd have to do is spend $100,000 a year. You can have 25 scanners with all the back tests. We don't want to do that. What we want to do for you is we want to keep it simple. We just want to spoon feed you all the trades. There's a reason I've been in business for 15 years, and our churn is the lowest in the industry. I deliver positive trades and positive results. I don't know what else I can say. So number one, you get the signal from the scanner. Once again, Don't worry about that. You don't have to. Okay? Never. You don't have to. Number two, you put the signal and scanner into the back tester. Once again, you don't need to spend $100,000 a year to do that. We will do that for you. Number three, you place the trade in your trading account. That's it, guys. KISS system. Keep it simple, stupid. Okay? So, that's all we have to do. Number one, you get the signal. Number two, you put in the back tester. Number three, with the trade on our account. You're up to your discretion on how much you want to allocate per trade. But, some trades I'll do $100. Some trades I'll do, I've done up to $10,000 in some trades. AK's gone a little wild before. Trust me, I've gone wild. So this is the portfolio that we're going to offer you guys today. You're going to get 1 month of our live trading room, plus our Alpha Shark alerts. 200, it's up 257%. If I looked at it per trade, see, count on me there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 1, 2, 3, 4, 6, 25. So it's up about 10% per trade, winners and losers. Okay. How does that sound? Would you like to make 10% per trade with winners and losers? That was pretty good to me. 257% means that you started with $10,000. You'd have $25,700 before commissions. And I trade with Tradier, so I pay 0 commissions. Sounds pretty good to me. You get all the signals, 3 different methods, 100% free. You get them via Telegram, push notification, and email. So you get these via Telegram, push notification, and email. Here's emails with reasons that we like it. We kind of use ChatGPT for a synopsis. Lately, I've been putting on so many signals, I really don't have time to do this. But we do send these out as well. We used to do it a lot more. There's been so many trades. I think we've done probably like 20 trades this week, 15 trades this week. But for Alpha Shark, what you guys will be privy to, you get 1 trade a week, up to 1 trade a week. And that'll be the best handpicked trades by myself, Andrew Keene. So here's a couple of our testimonials. David said KWeb, 110% profit overnight. Raja said AK. Raja's still in the trading room, I think. AK, you're the best. Warhol said ARKK, 80% profit overnight. Jacqueline said, nice, Daniel. And then John said 172% Baba. So you will get access to our live trading room when you sign up today. Not if you sign up today, when you sign up today. And we do have questions. If you guys have any questions, feel free. We're going to be stopping this in about 5 to 7 minutes here, but I want to give you a chance to get in. So introducing for the first time ever, this is our lowest price we've ever offered it. This is the live trading room plus the Alpha Shark alerts. I will repeat, this is the live trading room plus Alpha Shark alerts. You will get 1 month access of the live trading room. Okay, so you'll get 1 month access of the live trading room. Plus, you'll get, it runs from 9:30 a.m. to 4 p.m. You can be in there all day long. If you don't want to be in there all day long, you don't have to be in there all day long. Plus, you'll get Alpha Shark alerts via via Telegram, push notification, and email. This is the lowest price we've ever offered. We're basically offering it for free for a month. The amount of work that I do is insane for the price that you're going to get it for. But we wanted to give you guys and David's group an opportunity to get a great deal on this. So introducing an Alpha Shark trading room and Alpha Shark alerts. You're going to get 1 month of the live trading room. Has close to about 100 people in there every day. You're going to get Alpha Shark alerts via push notification, email, and Telegram. And the 1 month of Alpha Shark alerts. You can sign up at alphashark.com/July. 1 month of live trading room. And I almost guarantee if you come in here for a month, you'll learn a lot and you won't leave. You'll be in here for the next 15 years. Here's the link, alphashark.com/July. See Brian is in. We see Mark is in. And if you go to our website, I just want to show you this, how much we actually charge for all this stuff. So alphashark.com and products. So the live trading room on our website is $3.99 a month. We're literally giving you this basically for free. $99 you guys can get in. Okay. 99 bucks you can get in. So I don't know why you wouldn't. Try it for a month. If you like my presentation today, try it for 1 month. What's the worst you can lose? $99. 22 trading days in a month is $4 a day. I got a juice today. It was $8. $8 for a juice. I got keys made. I spent $40. So just try it for a month. You have nothing to lose. alphashark.com/July. I see people signing up here. Free bonus. You're going to get all these trades via push notification, email, and Telegram. Push notification, email, and Telegram. Also, 1 month of AlphaShark alerts. It renews at $199. So renew at $199. But you can just try for 99 bucks, guys. I almost guarantee that if you try it for a month, you'll keep it for $199. $99 is the promo price. And even if you don't want to, if you want to cancel it, all you have to do is email us. We'll cancel it for you guys. And that is my presentation today. Trading room included after the renewal. Yes, we'll keep you in the trading room and AlphaShark alerts for $199 after the first month. The trading room is $399 and AlphaShark is $199. So it's basically $600 a month that we're giving you, basically an 87% discount for being on this webinar. So simple and easy. Just take advantage of that. It's really worth your while. So this is the perfect time to get in today. If you want to improve your trading, you've taken the first step in your trading, which is showing up to the webinar. Hopefully you learned a lot today. Now you have to take the second step, which is actually applying it. You actually have to apply it, believe it or not. So step number 2 is applying it. And the way you apply it is you take advantage of the promo we just gave you today. So 1 month of live trading room plus AlphaShark alerts. If you got any questions, please put your question in the chat box. We got about 5 more minutes together. I'm at like 50 minutes right now, actually, believe it or not. Here it is again, guys. AlphaShark trading room and AlphaShark alerts. 1 month of the live trading room. I taught you how to trade options, calls, puts, buying calls, selling calls, what's the best strategy, my technical indicator I like to use, my favorite indicator, which is order flow. Does the trading room run the whole day long? Yes. So you'll get me from 9:30 to 10:30 Eastern Standard Time, and then you'll get my other moderators throughout the course of the day. We have 5 moderators that run the room, 9:30 to 4, all audio, all visual, all day long. You can come in there for an hour. You can come in there for 10 hours. I don't really care. A lot of people come to my session and leave, but our other moderators are good with a different trading style. Plus, you're going to get 1 trade per week, and I showed you what those look like. I don't really need to sell this thing. Because this thing just basically sells itself. We saw Deborah was in. We see Mark was in. We saw Steven was in. This is it, guys. So you're going to get access. This is what the trading room looks like. There's still 20 people in here right now. It's not even running. In the mornings, there'll be about 100. When I leave, it gets down to about 60. And this is the trading room. So audio and visual. Watch me trade live. People don't do trading live rooms anymore because it's pretty exhausting. But I have a lot of energy, and I've been doing it for a long time. So that is my presentation today, David and your team. Thank you guys so much. It's 1 month of AlphaShark trading room. See some people signing up. We only have about 10 spots to sell at this price point. So 10 spots available, guys. We have about 6 left here. Now we have 4 left. You want to get in 1 month, 99 bucks, and then it renews at $199. You can cancel it if you want. Thanks, everyone, and have a great night.